Good day Forex trader. Eurusd Forex signal, bearish sentiment amid more hawkish Fed. It will likely keep falling as bears target the lower side of the channel at 1.0980. Bearish view. Sell the Eurusd and set a take profit at 1.0975. Add a stop loss at 1.1100. Timeline, 1 day. Bullish view. Set a buy stop at 1.1080 and a take profit at 1.1150. Add a stop loss at 1.100. The Eurusd pair remained under pressure on Monday morning as investors reflected on the latest American non-farm payrolls, NFP, and the ongoing crisis in Ukraine. The pair is trading at 1.1050, which is about 1.22% below the highest point last week. Hawkish Fed expected. A key theme in the market has been on the Federal Reserve and the need to be more hawkish. A case for more aggressive rate hikes happened last week when the U.S. published the latest NFP data. According to the Bureau of Labor Statistics, the U.S. added over 431,000 jobs in March after it added over 750,000 in the previous month. Most industries, especially those in the hospitality sector, led the growth. Other numbers in the report were also positive. For example, according to the BLS, the unemployment rate declined from 3.8% in February to 3.6% in March. This was its lowest level it has been since the pandemic started. Wages and participation growth also continued rising as the tightening continued. Early during the week, the BLS said that the number of vacancies in the economy remained above 11 million while the number of initial jobless claims fell. Therefore, with inflation rising quicker than expected, analysts believe that the Federal Reserve will embrace a more hawkish tone in the next meeting. Some analysts expect that the next rate hike will be about 0.5%. Indeed, Fed officials have also sounded optimistic that they will deliver a 0.5% hike. In a statement to the Financial Times during the weekend, Fed's Mary Daly said that she was in support of a 50 basis point hike. She said that a case for 50 bps, barring any negative surprise, had grown among her colleagues. She now believes that the neutral policy rate to be between 2.3% and 2.5%, meaning that the bank will need several more 50 basis point hikes. Eurusd forecast. The Eurusd pair retreated last week as investors focused on the EU gas crisis and the strong numbers from the United States. On the 4-hour chart, the pair managed to move below the 38.2% Fibonacci retracement level. The pair also moved below the upper side of the ascending purple channel and the important support level at 1.1120, which was the lowest point on January 28. It also moved below the 25-day moving average. Therefore, it will likely keep falling as bears target the lower side of the channel at 1.0980. Gbp Usd Forex signal, drop to 1.3050 highly likely. The pair will likely keep falling as bears target the next key support level at 1.3050. Bearish view. Sell the Gbp Usd and set a take profit at 1.3150. Add a stop loss at 1.3180. Timeline, 2 days. Bullish view. Set a buy stop at 1.3155 and a take profit at 1.3200. Add a stop loss at 1.3100. The Gbp Usd pair remained range-bound on Monday as investors reacted to the strong American non-farm payrolls, NFP, data and the ongoing crisis in Ukraine. It is trading at 1.3115, where it has been in the past few days. US and UK recovery. Recent economic data from the US and UK have painted pictures of economies that are having a steady recovery. 2 weeks ago, numbers by the Office of National Statistics, ONS, revealed that the UK unemployment rate has dropped to the lowest level since the pandemic started. The same picture was painted on Friday when the US published its latest employment numbers. The data showed that the economy added over 410,000 jobs in March. The Bureau of Labor Statistics also revised the February jobs numbers to 750,000. However, the common denominator is inflation, which has pressured the Fed and the Bank of England to embrace a more hawkish tone. Recent data from the UK revealed that the headline Consumer Price Index, CPI, rose to a multi-decade high of 6.2%. Another survey showed that more UK companies are now expecting to raise prices than at any time since 1980s. Meanwhile, in the US, recent data revealed that inflation rose to the highest point since 1970s. Worse, the situation is expected to worsen as commodity prices are expected to rise as the crisis in Ukraine worsens. Russia has said that it will demand payments for its commodities in rubles, which could lead to more shortage. The only major catalyst for the GBP/USD pair will be the upcoming speech by Andrew Bailey, the Bank of England, BO, governor. In his statement, he will likely provide his opinion on how fast the BO is expected to keep rising interest rates. His statement will be watched closely because the bank will not hold its meeting this month. Gbp Usd Forecast. The Gbp Usd recovery peaked at 1.3300 in March. Since then, the pair has been making a slow downward trend and is currently trading at 1.3115. It has moved slightly below the 25-day moving average while the relative strength index, RSI, is at the neutral level at 50. It has also formed what looks like a head and shoulders pattern. Therefore, the pair will likely keep falling as bears target the next key support level at 1.3050. This view will be invalidated if the price moves above 1.3200. Aud USD Forex Signal, bearish bias ahead of RBA decision. The outlook of the pair is neutral at this stage. Bearish view. Sell the AUD USD and set a take profit at 0.7445. Add a stop loss at 0.7540. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 0.7520 and a take profit at 0.7600. Add a stop loss at 0.7450. The AUD-USD pair moved sideways on Monday morning as investors refocused on the upcoming interest rate decision by the Reserve Bank of Australia, RBA. The pair is trading at 0.7500, where it has been in the past few days. This price is about 7.7% above the year-to-date low. RBA decision next. The Australian dollar has done well in the past few months, helped by the dramatic increase in commodity prices. Most commodity prices that Australia exports like natural gas, coal, and copper have all increased as the crisis escalates. The currency has also done well as investors price in a more aggressive RBA. In the past meetings, the RBA has said that it will continue leaving interest rates unchanged at 0.1% until real inflation moves to between 2% to 3%. Therefore, analysts expect that the bank will follow the steps of other major central banks that have also started to hike interest rates. The Bank of England, BO, has made 3 rate hikes while the Fed has made its first 0.25% hike. And many Fed officials are now supportive of more hikes even as signs of recession rose. Last week, the yield curve inverted for the first time in years. In a statement during the weekend, Mary Daly of San Francisco Fed said that she was supportive of a 0.5% rate hike in May. Therefore, the next major catalyst of the AUD-USD will be the upcoming RBA decision that comes on Tuesday. There is a likelihood that the bank will change its tone during the meeting. The pair was also unchanged after the latest Australian retail sales numbers. According to the Australian Bureau of Statistics, ABS, retail sales held steady in February even as inflation kept rising. AUD-USD Forecast. The AUD-USD pair has been in a strong bullish trend in the past few months. Recently, however, this price action has faded and the pair has been in a tight range. As a result, the price is along the 25-day moving average and the middle line of the Donchian channels. The relative strength index, RSI, has moved to the neutral level. Therefore, the outlook of the pair is neutral at this stage. However, there is a likelihood that it will have a minor bearish breakout and retest the support at 0.7442. On the flip side, a move above the support at 0.7537 will mean that there are more buyers.